You have mastered support and resistance. You know your usual double tops and head and shoulder. But what if I told you there are three price action chart patterns, smarter, rarer, and more accurate, and almost no one is talking about them? Once you spot and identify them, you will never trade the same way again. They provide more and better profit than the common chart pattern everyone can identify. Hello traders, welcome back to Finspoke channel where we break down trading, money and mindset into simple practical lessons. If you are serious about winning financially, you are welcome to the family. Smash the subscribe button, hit the bell icon and give this video a thumbs up. Let's get into it. All right. The first price action chart pattern I want us to look at is bump and run. This chart pattern goes in two ways. It has a bearish bump and run and a bullish bump and run. It is a reversal pattern. It's something like this. So this is the pattern. It normally comes like this. It first gives it starts with maybe one or two. It usually starts with one or two consecutive lower high or higher high, as the case may be, then allowing the trader to draw this trend line, and the move down significantly to give a V shape, pushed up and come back to retest the trend line before shooting up. So when it forcefully or significantly push price down, it will come up to break this trend line. When it breaks the trend line, it will return back to retest the trend line, using it as a support level or using it to form a demand zone before pushing up. Now, if you understand this chart pattern, you can always take advantage of it. You want to enter the trade, you can enter the trade here. You can enter the trade here. At the retest, you can enter the trade here. If you also understand this pattern, if you spot it early enough, you can also enter the trade here. If you enter the trade here, you can take here as your TP1, take part of the profit, or when it gets to this level, you adjust your SL stop loss to this level. Wait to see if it will break this trend line, shoot up to come back to retest the trend line. You can, if you are the type that manage your trade, you can enter another trade here. If it comes to retest the trend line, you are still in the market if you adjusted your stop loss here, or you took part of the profit. That means it will bounce you out. So if it comes here to retest the trend line, you enter another trade here, that is opening another position here, then ride the two of them to the next resistance level. Let's look for it in a chart. So you put your trend line, look at it here. We have the lower high, lower low. We also have a lower high here. To have a lower low and a lower high before it forcefully shoots down with this momentum candle, forming, giving us this more or less V pattern, shoot up, broke this trend line, came back to retest the trend line before moving. Also understand the fact that there is no trade that will just peak and run straight to the next support or resistance level. No, when they pushed up, like when there's an impulsive move, there's definitely going to be a pullback. That's why you see something like this. You see something like this and like this before going up. This is actually Euro USD. You can also backtest this using GBP USD, using BTC USDT. You can backtest it also using Ethereum USDT, Solana USDT, and any other altcoin. These are some of the patterns that you see at the higher time frame. So if you are good at price action, you should also be good in chart patterns. We have another one here. Also know that it will be very difficult for you to see a trade that will just give you a straight line like this. Expect to see a straight line? No. Is an accumulation of candles that give you whatever we are drawing. We are giving to you as a drawing, or we are showing you as a drawing, as you can see here. This is another of it. I'll read up here. It's a reversal chart pattern. So it came here, shoots up and down, forming a lower high and lower low. Get to this level, and it broke the trend line. Shoot up to return back before moving up. When you are trading this, there are certain candles that you also need to watch out for. Rejection candles, as you can see here. So you watch out for rejection candles. Let the rejection candle match your confluence, and you look for it at the key zones. This is a zone. This is, you can call it a support or demand zone. This is a zone. This is higher time frame. This is 2 hours time frame. So you can call this a demand zone. You can also call it a support zone. So this is a zone. You also need to look out for engulfing candles too, doji candles, small bodied candles. Do your homework. All of these candles I mentioned are here. You can look out for also evening star, marabozu candle, and it comes in 3 phases. Phase is the one we call the lead-in phase, where the trend is developed. Around here is where it started shooting down. Then we now have the bump stage before we now have this run stage. If you understand it, you will make real bucks from it. The next chart pattern we're going to look at is the pipes. This one comes in 2 long candles. So the pipe candle or the pipe chart pattern normally comes like this. It's mostly characterized by 2 adjacent unusual large candles or large candle spike down, indicating that buyers or sellers, that if you find it at the support level or the support key zone, it indicates that sellers are losing control of the market and are handing over, or the sellers are losing control of the market and the buyers are taking control of the market or gaining momentum. Then if you find it at the resistant level, what it implies is that buyers are losing control of the market and the sellers are gaining momentum. That's the psychology behind this candle or behind this chart pattern. Without wasting time, let's look for the pattern in this chart. Look at it here. Look at the two candles here. This is this pattern, the chart pattern here is what we call pipe chart pattern. It actually formed at the key zone or the support key level. Now there's something I want you to know about this chart pattern. It is a powerful chart pattern when spotted on a weekly or daily time frame, and this is just a perfect example of it. Let me show you what I mean. Look at when this thing occurred. Monday, 23rd March. This is 2020. If I'm not mistaken, reading this date. It keep pushing. It came to retest the zone here. Get to this place. August 2020. There was a pullback. That is why you have this here. To retest this former resistance zone. It started pushing again. Still a continuation and extension of this trend. It started pushing again. Until it gets to here, this place. 2021. So you can see that it is still the what happens here around early 2020 that pushed down to this somewhere around 2021. Okay, it came here and the trend ended. It started coming down. So when you spot it at the weekly time frame or daily time frame, top-down analysis is key. When you have a good knowledge of what is happening in the higher time frame, it will help you get a good trade and manage your trade at the lower time frame. So this chart pattern or these pipes comes in two forms, the bearish and the bullish. But understand the fact that both of them are reversal chart pattern. This is the bullish reversal chart pattern because it formed at the support key zone. If it formed at the resistance level or resistance key zone, then it is a bearish reversal pattern. Take note of it. Most times, what normally causes this is a panic in the market, or would I say sentiments. Sentiment, like here, let me say that is a panic sell. So buyers have to take over. So there are actions or things that happens in the market that reflects sellers or buyers behavior, and that is what we see in this candlestick. I will make another video separate on what affects or the cycle behind each of these candles that you are seeing. Something normally triggers this particular chart pattern. You can still go ahead to do your homework by backtesting this to see how it works. When you backtest it and have a good knowledge of it, if you spot it at the higher time frame, within that period, you will make something if you know what you are doing. When you spot this pattern at the higher time frame, move down to the lower time frame to get a good trading opportunities. Sometimes when you move to the lower time frame, you will see this formed at the lower time frame. You also see this pipe formed at the lower time frame. Sometimes you also see this V shape at the lower time frame. That's what you keep seeing. Trade the break of the low. So you have to confirm the break of the low of the bearish candle before you enter it. But you don't need to enter it at the weekly time frame. You need to go down to the lower time frame to take a trade. The good knowledge is that you spotted a good opportunity at the higher time frame. So you make good use of it when you move down to the lower time frame. Look at it in the daily time frame. You see, it formed something that looks like V shape, as I said earlier, at daily time frame. Let's look at the 4 hours time frame. I wanted to show you more at the lower time frame, but this is a free version that I'm using, so they couldn't allow me. They say I should choose a plan. I wanted to show you the patterns. Okay, So when you spot that sign, go down to the lower time frame and do your homework. Take a good trade there. That's where you keep seeing or keep getting a run up, aggressive movement, a run up. If you are gaining value in this video, don't forget to smash the subscribe button, leave a comment. Please, your comment means a lot to me, and give this video a like. The third price action chart pattern I want to reveal to you is the one called diving board pattern. Now, this price action chart pattern resembles, or it appears to look like, a flat build up called board, then followed by a kind of a drop or fall in price, which is called the dive. You spot it around the key zones: support key zones, resistance key zones, demand key zones, supply key zones. Is best seen around daily or weekly time frame. Knowledge, an in-depth knowledge or an insight of what is happening in the higher time frame, you'll be able to perform well or make good profit from the lower time frame. The pattern normally comes in this shape. Now, this is a period of consolidation. It come here and start consolidating. That is the board phase of it. It consolidates here. Now it pulls down here from here, which is the dive stage or the dive phase of the chart. That is a price fall, a significant fall in price. Then the price will start, regaining strength, and they come up to break this horizontal line, then shoot up. Then when it shoots up, it gets to the resistance level, make a stop. Sometimes it can continue, but in most cases, it will shoot back. When it gets to the resistance level, it will come back to this support level or to this horizontal line, and either go up again, start consolidating, or start shooting down. It depends. But once it broke the horizontal line, you can consider going long. That's entering a buy position, targeting the next resistance level as your take profit. This is actually Euro JPY. If you look at the 3 chart patterns I've discussed in this video, I use different pairs to show you that it's not just about talking. You need to do your homework to backtest in order to understand what the market is doing. Look at this. This is the consolidating phase. Let me draw this. This is the board phase of this pattern here. This is the board phase. From here to here is the board phase. The price was consolidating. Remember that this is a daily time frame. This is daily time frame. You can see it. This is a daily time frame. So the price consolidated here. Then now there was a fall, forceful push down of the price down, which is the dive. Then price started gaining momentum to come back to break this horizontal line. Came back to give a retest of this horizontal line it broke at the key resistance level and now shoot up. Now it gets to this resistance level again. pushed down, came back to retest the zone, and started coming down. This diving board pattern can be a bullish reversal pattern, and it can also be a bearish reversal pattern. At this point, it's bullish. It formed at the support level. This is the support zone. At the support zone, that is where it formed. At the support zone. Okay. Then it also came up and gave us another chart pattern. This is one of the commonest chart pattern we know in price action, which is this double top. Don't come and tell me, madam, this thing is not double top. The double top mustn't be like this. Okay? Look at this. I always tell you people, don't consider the tip, consider the area as a zone. When you start seeing areas as a zone, it will help you to make an informed decision and understand what is happening in the market. This is a double top. If this candle also gets to this place, it is still a double top. Okay? This is a zone. That is why we consider it as a double top. This is a zone. So the price also came here and give us another chart pattern, that if you understand price action and chart pattern, how they work hand in hand, you also write the trade down. So what I'm trying to say in summary is that if you understand chart pattern and the price action, you will keep making good money. From the higher time frame down to the lower time frame, you get the pattern, what is happening in the higher time frame. You move down to the lower time frame. Take trade with confidence. Now, to trade this pattern, you can consider going long at the break of this horizontal line. You consider going long. Take a long trade, or you take a buy position, targeting the next resistance level as your take profit, while you put your stop loss around this zone, around this area, just to manage your risk very well. If you gain value in this video, please support this channel by subscribing to this channel and leaving a comment below. It will help the algorithm to push this video to more audience, and give it a like. If you are also still struggling with your trading career, I run a coaching session. It's not free. It's a paid version. You can reach out to me. Let's see how we can help you start making money in this industry. Thank you for watching. See you in my next video.